All right, I guess it'd be better to just type in the premium live chat with questions, but I'm gonna start at the top of the list right here, and I'm just gonna scroll down, and we'll go from there. Um, First question is the difference between when you enter a trade based on momentum prior to a candle opening above your resistance compared to waiting for that candle to open above your resistance. There are a lot of times when you wait for a candle to open above your resistance, then it's too late to enter. By that point, you're chasing the stock. Then there are times where the candle spikes over resistance and comes back down and closes below your resistance, leaving you in the red. When do you know you should enter early? When you should wait for a candle to open above resistance? Basically, more in depth when entering trades. It's that's going to be different depending on the type of stock we're trading. If we're trading a small cap stock that has momentum, they spike very rapidly. So I time my entry point solely based off of the price action and the volume spike going into the resistance level. For instance, if there's a stock that's say $5, I always use that as an example. Um, what I'm going to do, or I can use this one right here as an example. What I'm going to do is say this level right here, the 225 is going to be the key level to break. What I'm going to do is I'm going to watch that price action. And what you'll see on the sell side of the level two is you'll see those sales start stacking, and then you'll see buys come in rapidly and start eating through those very quickly. And that tells me that it's probably going to be a spike over that key level. So I'll preload at that point. Um, but if it's a stock that's moving very slowly, what I do is I'll wait for confirmation over that key level. I want to see support over, like right here. If this stock was moving very slow, I would wait for it to break that level and then a pullback. I want to see it hold on that. But 9 times out of 10, when you're trading small cap stocks, once it breaks that level, and you're not in it, it's going to be too late. So with small caps, you gotta preload pretty much. Because if you wait for it to break that level, you're going to buy the gap up. So if you try to enter at 225, your order may fill at 250 because it moves so rapidly. And that's why most of my trades are literally 5, 10 seconds. But that's the gist of it, and I hope that explains it well. If you have any questions about that, you can go ahead and ask. And if we could type in the premium live chat for the question, so I don't have to scroll all the way down in the weekend education. The next question is, I think this comes down to everyone's personal preference, but what's everyone's favorite platform to trade on? Like you said, that's all personal preference. I use Webull for charting. I did use like I think it was Trading View or something like that. I don't even remember the name of it, but you have to pay like $200 a month for that, and Webull is just as good and it's free. So I use Webull. Right now, I have 9 screens that I'm looking at all times on Webull, and I have absolutely no issues with it. As far as trading goes, I need a direct access broker that caters to day traders. I do options on Webull, but when it comes to scalping, I have to have a platform that executes the trades very quickly. So I used DOS Trader through Capital Markets Elite Group. If you have over 25,000, I would recommend Lightspeed because as soon as you hit your hotkeys, you're in the trade and out of it just as soon as you press the button. But it's all personal preference. What to each his own on that one. Options plays, understanding how to trade key levels if different than small caps. What the guys are actually saying in the thread and when to get out. I I'm not an options trader. I'm still learning about options, but basically all I'm doing is I'm taking my watch list that I make every day for mid and large cap stocks, and I'm identifying those key levels. And for instance, let me go to ISPO for an example. For instance, I'm going to just say, and this is not going to be accurate. This is just an example. Say this is the key level on the short side, and this is the key level on the long side. Basically, what I'm going to do is I'm going to find the key level like right here. This is going to be the next key level going down, going up. This is going to be the next key level. And again, this is just me throwing stuff out there. Um, Basically, what I'm watching for options is okay, I see it coming down. If it breaks below this, I have a general idea that it's going to come to this level. So what I'll do is I will buy puts for this next key level. And same going up, I'll buy calls for the next key level that I think it could go to. That's how I've been trading options. The expiration, uh, I've been buying options that expire on Fridays. I know I could have made a lot more money buying the zero DTE option plays, but I've just been playing it safe while I'm learning and buying options that expire on Friday. And if I'm swinging them, I've been buying options that expire the next week. Um, but I'm still learning on that, and we're all going to learn that together. I'm doing very well with options. So the key levels are working, and we're only going to get better from here with it as I learn more. Since the small caps slow, I personally would like to understand the option side. You're killing it on those. Yeah, that comes down to just basically what I just said. I'm solely doing this off of key levels. And then there's a few things I'm learning as I go. But the key levels are working just fine right now. I know they're not always going to hit, but they're working for now. And of course, I will continue to learn and try to educate everyone as I'm learning. But as of now, that's all I really use is just those key levels. I'd love for you to go in depth about how to prevent false breaks on small caps, specifically with growing a small account when the key levels are correct, but for some reason they fake out 5 to 10 cents, passing the bid side level and then crash. That comes down to watching those level twos again, like I said with that first question. In small caps, is if you learn to read the price action and the volume, you're able to preload those. So what you can do is say that key level is that $5 mark again, and you enter it 490, and you see that it's a false break. When it drops back below that $5 level, you can close that position and still be green on it. And that's just basically what I do. Sometimes if a stock is moving slow, I will wait for it to break over that 5 level. But I'm looking at the bid side. The chart may say 505, and the bid side, what people are paying for it, may say 499. Um, you don't want to buy it by looking at that chart. You have to look at the level twos and see what people are actually paying for it, because that's a false breakout. It says 505, but no one ever paid more than $5 for it. So technically, it never broke that key level. So we have to look at the bid side on the level twos. And then if it drops back below that 5 level, you got to get out and you got to keep trying to re-enter. I'll benefit greatly from a session. The basic fundamentals of options trading. Learning to identify key levels. It's the same key levels that we've always been doing. We're just doing it on large cap stocks. So basically, the only options plays I've taken are plays from the watch list, and I've more than tripled the options account just doing that. So I, I don't think people should overcomplicate it. You're going to look too far in depth with it, and that's why I think I'm doing so well with this, because I'm not overcomplicating it. What is the correlation between price action and volume when deciding to place trades? What signals a bottom slash top based on price action volume? The price action and the volume, basically, like I said a minute ago, all I'm looking at, and this is another thing that I'm not overcomplicating. All I'm looking at is simply, I want to see those cells stack on the level two, and I want to see those buys come in and eat through that. And it happens very rapidly. And as it's doing that, you can look at the volume, and you'll see the volume spiking tremendously, and that tells me that the stock price is probably going to go up because there's more buyers coming in, pushing that price up. You touched on this earlier, but I wanted to get a bit more info on hotkeys and being able to get in and out quickly. Weeble sometimes makes it tough to exit quickly, especially something nice. Creating a bid, it goes under. What advice do you have to learn about hotkeys using better broker, assuming I'm over 25K? I don't, with the hotkeys, I don't ever have that issue. Um, because I do use a brokerage that caters to day traders, so my order execution is very quickly. You won't ever see me going in and setting a stop loss on a play, because I'm looking at the play that I'm in. I'm watching that screen, and my hotkeys are going to hit a lot faster than that stop loss will. Because, like you said, if you're in Weeble or TD Ameritrade, something like that, and something just completely nice down, it's not going to fill your order. It's going to skip over it because it happened so quickly, and then you're stuck holding that and have to go back in and cancel that stop loss to sell it. So under 25,000 CMEG using DOS Trader Pro, over 25,000 light speed. That's gonna help you with that issue there, as far as getting stuck in plays and your stop loss, your stop orders getting skipped. Usually, how do you narrow down your watch list? What do you like to see or not in a stock? Do you consider stocks under VWAP? No, no, I do not. I'm a momentum trader, so I have to see upwards momentum in order for me to trade that. Now we're shorting, so I need to see downwards momentum if I'm going to short that stock. But the way I narrow my watch list down is basically I click through the scanner. Like right here, I'll click through it and then I'll just look for patterns that I like and I'll go from there. Um, like I'm trying to find one. Like this right here, you can see there's a huge spike right here. So if I click through the watch list and I see this right here, I'm gonna say, okay, here's one that I like. I'm looking for patterns. This is a bull flag. So I'm looking for any type of bullish indicator as I click through, and that's how I narrow that watch list down. As far as large caps go, you don't have to click through and see a pattern. Um, those run off the news, what the spy is doing, and so on. So basically, you just go to the large caps and you identify those key levels because you know where it's probably going to go if it breaks those key levels. All right, let's see what the next question is here. The discernment with key levels, price action, etc., that made you successful. Um, you have to be able to identify key levels if you're going to be a successful trader. That is hands down the most important part. Because if you're looking at a stock, um, say a key level is right here, and you can go across and you can see how many times it is rejected at that level. So we know that a stock it may get rejected there. But however, if it breaks that key level, we can zoom out and like on the daily or whatever it is, and we can see where it went. And then we have an idea of what will happen if it does break that key level. As far as price action goes, that's something that's very important that you need to know as far as scalping goes, because that's going to give you an idea of when to enter when it's approaching that key level. If you're a swing trader and you plan on holding a stock for months at a time, I don't think any of that stuff matters. But as being a day trader, momentum trader, and scalping quickly, you have to know how to read that price action and volume, and you have to be able to identify those key levels. Everyone that's watched me live trade small caps, you see what it does as soon as it breaks that key level I mentioned. The things gap up or gap down tremendously, and that's the importance of knowing it because you could be in that play before that happens. I'd love to see a video at potential stocks to put on the watch list and your thoughts as you are looking. Um, I don't know if you watch every morning, but I make the watch list as we're going. But basically, all the watch list is I wanted this to be a group thing. So and it's just one of those things that I'm doing it just to teach everyone that's Premium Live members how to identify those levels. So basically, what I do is I ask everyone in the morning like, what stock do you want to see? And I take 8 or 10 of those out of that, and then I make key levels on them. And I'm really just doing that to teach everyone how to identify those key levels. But if you have a stock that you want me to give you some examples on key levels, if you'll throw it out here, I'll be glad to do that. What time frames do you derive the key levels? Do you draw new levels if you switch to another time frame? Basically, the watch list that I draw, the key levels on that are solely from the 30-minute chart. And it's been working well. I see what it's been doing in kind of a short time frame and a long time frame. If I use a different level, it's going to be the hourly or the daily. Really, the only time I use the daily chart is if I want to know where that stock is headed over the course of like the next week or so. Haven't been around much in the past 2 weeks, so if this was asked before, then I apologize. But would really like to go into detail on how to choose key levels. I remember watching you do it a few times, understanding why you pick certain levels. Need to understand them, and then look over general TA stuff. I'll just give an example right here on Tesla. Basically, we're going to go to that 30-minute chart, and I'll clear these. I'll just move all these down. What we're looking for when we are identifying key levels are multiple levels of rejection or intersection. So basically right here, we know this is going to be a key level because this was just a massive reversal. But what I do is, like right here, this is another key level. You have 1, 2 rejections there, and then you have 2 places where the wicks intersected that. Then another key level is going to be right here. And if you look across the chart, you can see this was support over here, and then this was resistance on this side. The wicks crossed it, but a candle never opened up on top of that, and it rejected there. And then another key level is going to be right here. And you can see the bottom. A lot of people would say that the bottom of these wicks are the key levels, but it's not. This one right here is the key level, where that red wick came down. So we have 3 levels of intersection right there. So that's another key level, and that's how I identify them. I'm just looking for the areas where the chart rejected or intersected multiple times, more than just one. Like this right here, the top of this, that's not a key level. You have to move down to this area right here where there's 3. With CMEG/DOS Trader, if you purchase 500 shares of ABC stock, then scale and sell 250 shares and 125, 125 again, are you charged commission for each buy and sell transaction? Yes, every time you hit your hotkeys, if you buy or if you sell, you are charged each time. That's why if you have a small account and you're using CMEG, I don't recommend scaling out of positions unless you're trading over, 500 to 1,000 shares, and I would only scale one time because those commissions will come back and eat you alive if you continue to scale. And that's just the way that I do it, and that way works for me very well. So if anyone does scale out of a position, I would make sure you have a good bit of shares and only scale once. Once you get up to those 5, 10,000 share range, you can scale multiple times. But if you have a low amount of shares, only scale once or not at all. Just take your profits. Would love to see more quick video recaps of plays you took for the day, if that's too much. Uh, Recap your best trades of the week. No 2 plays. Yeah, I'm actually gonna start doing that again. I was doing it for a while, but I haven't been trading lately. I've just been teaching, but I am gonna start trading again and doing those recaps. Um, it just takes a while to edit it, and I've had a lot of stuff going on because the sessions that I do are like 3 hours, so it takes a lot of time to go in and edit out those 20-second clips and stuff. So, but as soon as I start trading again, I'm gonna start posting those trade recaps like I did in the past. So that is definitely coming. Where you leverage 1 minute chart versus 5 minute and why? Perhaps this relates to small caps versus large cap trades. When I'm watching large caps, I watch the 5 minute chart because they trade it pretty accurately in ranges. Um, and if you use the 1 minute chart on those, you're going to get faked out, and you're probably going to panic sell. As far as small caps go, I use the 1 minute chart on momentum plays, and I just do that because if you're on the 5 minute chart and you enter a trade, when you're getting ready to exit, if that stock does sell off pretty rapidly, you're going to get out a lot later using the 5 minute chart than the 1 minute chart. So I always use the 1 minute on small caps. The only time I will switch over to the 5 minute chart on small caps is if I'm in a play that has ran multiple dollars. Because when you switch to that 5 minute chart, that 9 EMA on the 5 minute chart is going to keep you in that play longer. But once I enter a trade, it has to move up a good bit for me to switch over to that 5 minute chart when it comes to small caps. I want to master your 921 EMA, especially entries and exits. I understand the price action and some candle patterns. I know all the fundamentals of options. My entry and exits are the problem. Yeah. The 9 EMA and the 20 EMA. And this right here is another example of it. Basically, if I was looking at this chart right here, I would say, okay, here's a key level right here. So what I would do is I would try to time an entry above that. And then I would enter in this area here. And then when you're using that 9 EMA, what you're looking for is that 9 EMA to come up above your entry point. So basically right here, say this is an example. This is not something I would actually buy this many shares, but say I bought 1,000 shares of this right here at this key level break. Once it runs up just a little bit and approaches probably this 20, I'm probably going to sell half of my position. And then that way, if the trade does go red, I can sell it and still be profitable on that trade. And then what I'm going to do with the rest of the shares is I'm going to let it ride up that 9 EMA. So you see it ran up here, it pulled back into that 9 EMA and then ran again. So I'm steadily making money as it runs with that 9 EMA. Pulled back, we didn't see a candle open under the 9 EMA here, so I'd still be holding this position. And then it continued to ride that 9 EMA. And then I would have sold when a candle opened under it, which would be over here in this area. So I would have went from down here at $722 and I would have sold up here at almost 800 by just simply using that 9 EMA for an exit. Someone said, what is the time period of your VWAP? Mine on Thinkorswim is always above yours. Thank you. Yeah, they're different. This is just the one that Webull comes with, and I don't believe you can even change the VWAP that's on Webull. It says VWAP 14, but you can't go in and change that, I don't think. And I mean, even if you could, I wouldn't because that's the VWAP that I'm used to. But it's VWAP 14. What are the top 2 to 3 strategies / methods that beginners should learn to trade when first starting out? Safe risk reward and consistent profit. I'm biased, but I think my 9 EMA strategy is the best trading strategy there is. It's going to keep you in those plays longer. It's going to take away panic. If you're a new trader coming into this, I do not recommend using the 1 minute chart. You can use the 1 minute chart if you're watching me trade, because I'm more experienced and I know what I'm doing. But as a new trader, you need to look at the bigger charts, 5, 10 minutes, 30 minutes, whatever it is, because it's going to cause less confusion pretty much. And you're not going to see rapid movements happening when you're using those bigger time frames as you do when you're using the 1 minute chart. And as a new trader, you're going to get faked out a lot if you stick to that 1 minute chart. So start with the higher time frames, and the better you get, slowly work your way down. Uh, you've had the pulse of SPY all week long. How many other people misread the trends? What are you seeing in the technicals to indicate SPY up or down on a day, and what are other people missing? So many mid large cap trends along with the SPY. The only reason I think I'm getting the SPY right and a lot of people are getting it wrong is because people are trading off of what should happen based on news. And in this market, you can't do that. If you're not a technical trader, and you trade on fundamentals, you're getting burned. We get good news and stocks crash. We get bad news and stocks go up. So all I'm looking at is just simple technical indicators that tell me which direction that stock is going to head in. And I mean, it's been working. I don't look at news ever. It's not something I do when I'm trading a small cap stock. I'll look and see if there's been a news release or a catalyst that is driving the price, but I don't read into the details of what happened with that stock, because it doesn't matter. If you're using technical analysis, you know when to enter, you know when to exit. So I think the only reason I'm getting what other people aren't is because I'm solely trading off of technical analysis. You don't ever hold positions overnight on CMEG, do you? No, I don't. I don't swing trade. Uh, When you get into a trade, how much of your account do you use percentage? I don't calculate percentages or anything like that. I have a set amount of shares that I buy, and it's based on my account. But basically, if I have $1,000 account, I'm going to put my whole portfolio into it. It's risky, but it's honestly how you build a small account fast. And if you have good risk management, you can manage that and minimize those losses and maximize your gains. But if I had a $25,000 account, I wouldn't be putting $25,000 into it. I would have a set share amount that I buy, whether it's 500 shares or 1,000 shares, depending on the price of the stock. You can change the VWAP period in the upper left chart on Weeble settings. I wouldn't know. Yeah, no, I'm not going to change it. I'm used to the way that this one is, so I'm going to leave it there. I can't stick around and listen. I'll rewatch later. Thanks for what you're doing and everyone here. Absolutely. If I was a new trader, I'd focus on hive day breaks. That'd probably help with confusion and key levels and whatnot until you get it. Yeah, I agree. As a new trader, I mean, just look left, what happened pre-market, or what happened, intraday, whatever that high day was, or whatever the low day was. You can use those as key levels. How do you come up with the levels and creating your watch list? Is it based on previous days? Yeah, just that 30-minute chart. A lot of these questions that are at the top, I've already answered. What advice and encouragement can you give to a hard-headed doofus like me who is very impatient and didn't listen and blew out his first small cash account over the week of trading? Look at this as a job. Um, I say this all the time, but you have to look at this as a job. You're doing this to make money. If you come at this from the approach of I want to get rich quick, um, you're gonna blow your account up because you're steadily gonna chase profits. What you need to do, I posted a rules thing in the education channel. Go look at those rules. 1 to 2 trades a day, maybe 3 trades on a hot day. If you make 5% on your account after that first trade, close it out. 5% daily over the period of a year is life changing. Don't don't keep chasing money. Make your money and be done. If you miss an entry, don't chase the next one. Wait for another stock to set up, but don't chase. Don't overtrade. Those are the two most important things that I can tell you. That it comes down to. I blew my account up so many times when I was learning this because I did chase and I did overtrade. I would, double my account some days and then I'd give all those profits back because I wanted to make more money. And you can't do that. If you have an 8 to 5 job and your boss hands you your paycheck, you're not going to go blow that because someone walks up to you and says, "Hey, if you give me your paycheck, um, I may be able to double it." You're not going to do that. Same with stocks. You made money, so why would you try to make more? Wait for the next day and another setup. It's essentially gambling at that point when you do it that way. Really would love to master entries, exits. A lot of my time entry is off, hits my stop loss, then takes off. Then opposite, if I hold thinking my entry was just off, it continues to drop and taking even larger losses. From a technical aspect, the key levels, if you're good at identifying key levels, they're always going to be right. The only thing that no one can actually judge is if the entry timing is going to be right because it may break that key level and be a false breakout, and it may do that 3 or 4 times. But the fifth time that it breaks it, it may run or gap up. So the key levels are always right. You just have to minimize those losses by cutting your losses quickly. If it breaks over $5 and drops to 490, sell that position, and then wait for it to try to break five again. When you take a position in a stock, whether short or long, how much attention is paid to chart and how much to the level two? What are you looking for on the level two if you're that tells you to sell? Um, I look at the chart as it's leading up to the key level. Um, And then my eyes come off the chart to the level two, and again, I'm just looking at that price action and the volume. Um, and I have to see the bid side go over that key level to know that that key level has been broken. People have to pay over that. How do you find the stocks you put on the watch list? There's 1,000 stocks. How do you find those eight? It's just a vote. And it's easy with large caps because, like I said, large caps trade in ranges. So you can sit there and trade large cap stocks all day, whether it's a SPY, Tesla, any of those higher price stocks. They trade in ranges, so they're very predictable. So it really doesn't matter what I put on the watch list. We're going to get movement out of all of those. As far as small caps go, what I'm looking for is a 5 to 10% change so I can catch those moves early, and then I wait for a setup, whether it's a bull flag or whatever it is. I wait for the setup that I like in a micro pullback into that 9 EMA. But I just try to catch them early as far as small caps go. But with the large caps, I literally just let the Discord vote on what they want to see, and I make those levels. And yeah, the someone said, "How are you finding the levels on your watch list to either go long or short on the stock? It hasn't quite looked like your normal momentum levels." Yeah, it's because it's large cap stocks. Small caps are a whole different ball game, and I truly think once you master small cap stock trading, you will be a very good trader when it comes to large caps. That's really the reason I think I'm good at large caps, and my key levels have been doing so well from that watch list is because I did learn how to do this using small cap stocks. When buying large price stocks, uh, like Tesla, do you still go in 25-cent increments for scalping, or is it higher because of the price of the stock being high? Meaning, is it raised to $1 increments? No, it's you can't trade large cap stocks like you trade small cap stocks. It wouldn't make any sense for you to, enter a stock that's $700 and sell it at $700.25 or $771. You have to know those key levels, and you have to be able to know where it could go. So you actually hold it until it gets to that next key level. Whether you enter at 700 and you see the next key level is at 725, you want to hold it and let it kind of slowly go to that level gradually. When buying a stock, watching the 1 minute chart. I think I've already covered that. Ryan, this question's really long, so going to write it out in hopes it makes sense, but you should be able to give a short answer. It's on scaling into a small cap key level play with larger size. You've outlined and discussed a lot of this the stream. Take some profits here, scaling out, etc. But we don't get to see much on the entry side. Since this is small cap plays, hasn't been here for you lately. I'm curious how you are entering the days you were making 25 to 50,000. I have the same dot trader set up. Um, Basically, I've said this before. When you're scalping a stock, I think the dumbest thing anyone could ever do is add to a position. Because if you are trading, a momentum play on a small cap stock and you keep adding to your position, you're eventually going to buy the top. Um, for instance, Ross Cameron does that. And that's why Ross Cameron loses his ass a lot of days, is because he's steadily adding and he's buying the top. And then he'll lose money. He may be up 100,000, but then he just keeps adding to it, putting more money into it. And I think that's absolutely stupid. You should never add to a play when you're scalping on small caps. If you're comfortable in your technical analysis, you should have no reason going in your full position from the start. If I want 10,000 shares of a stock, uh, I'm going to go ahead and buy 10,000 shares, and I'm going to scale out. I'm going to be taking profits while some people are actually buying more into the stock. So basically, if I take 10,000 shares of a stock at $5 and I sell 10,000 shares at 6, and you have someone that bought 25,000 at 5, or 2,500 at 5, 2,500 at 525, 2,500 at 550, and then they sell at $6 as well. I'm gonna make a lot more money than them because I took my full position from the start. The only time you should add to a position is if you're swing trading and you're not really worried about what it's going to do in a short period of time. But definitely do not add to plays when you're scalping. Be confident in your technical analysis and go ahead and make that full entry. And that's just my opinion. That's what worked best for me. And it doesn't make sense to me why people do that. And it's not wrong that people do it, but I just can't make sense of it why anyone would do that. And hopefully the way I explained it makes sense, and I don't just sound crazy. Do you place buy stop order so when it breaks a level, it will get in immediately? Um, Sometimes I do place a stop order to buy. If I don't feel like watching it, or if I'm looking at something else, I will place a stop order to buy a stock once it breaks a key level. But that's very rare. When I'm trading and scalping, I usually tend to be looking at the screen all the time. But I would do it on the buy side, and there's nothing wrong with doing that. But I wouldn't do it on the sell side because it may never hit your level, and you may get burned, or it may crash down, and then you miss it or whatever. Uh, Someone said it says the screen is not available for more than 25 users. There's 36 people viewing it right now. When you get in a trade, how much of your account do you use? Percentage, I already answered that one. Let me go back to the premium live chat. Um, during the whisk, it's on Discord and Zoom. The live trading that I do, Discord only allows 50 people to view, so the overflow goes to Zoom. Uh, Thanks so much. Makes more sense. Usually, a lot of traders tell you don't go in full and just add as you go along. But I've always thought that surely you're going to be up earlier than having to scale some. Yes, I again like I there's some very good traders that do it, but if you think of it in the way that I just explained about buying 10,000 shares full versus buying 2,500 on the way up, that it makes sense, and it just sounds stupid to add more to it if you're scalping. What do you recommend to increase confidence in plays? Been difficult for me in this market. In all honesty, it's screen time. A year ago today, I was not as I mean I essentially was just getting started. And as I sat in front of the screen every day, and I started, learning what these charts would do, and so on. So the longer you sit in front of the screen, the more you practice, the more your confidence is going to grow. Your confidence is not going to grow. You make one good trade, and then you come back and you're confident and arrogant, thinking you know what you're doing. The next trade you come in, and everything goes the exact opposite way of what you thought. So just more screen time and practice key levels. One of the best ways to practice identifying key levels is to go to the daily chart and make those key levels using the daily chart. And then you'll see how accurate your key levels are if you go from the daily to the hourly to the 30 to the 5 to the 1. And that's just a good way to identify major key levels. Using that daily chart, practice identifying those levels on the daily and then see where they all line up. Um, do you have a favorite patterns you trade? Do you find certain patterns have higher probability of success and failure? My favorite pattern is a bull flag, or a bear flag, but no, just the important thing is being able to identify all of those patterns, so you know what to look for and you can time your entry. But really, I mean, if I had to choose one pattern that I liked, that was my favorite. It would probably be the bear flag and the bull flag, and then wedges. But other than that, my least favorite is obviously a cup and handle. I talk about that all the time, uh, just because a lot of people don't know how to judge those, and if you're using those on small time frames, they get very confusing if you're a new trader, on how to judge those. But the longer time frames, they are better. All right, is there any more questions coming in that anyone wants me to answer before I hop off of here? Hopefully this was beneficial to everyone. And like I said, we're gonna continue to do this each weekend. So just be ready to keep asking the questions. As long as you're asking, I mean, I'll be able to teach you, and hopefully we can all progress together. But definitely, as a new trader, do not overcomplicate these things. Learn one thing at a time, master one thing at a time. Whether it's price action, volume, the EMAs, just practice one thing at a time until you're confident with that. Then move on to the next thing. Don't come in and try to learn a full strategy all at once. You're gonna confuse yourself. I say this every day. I'm gonna reread that question. What do you recommend to overcome self-sabotage, which leads to hesitation? If you come into the market and you are scared to lose money, the first thing you're gonna do is lose money because you're gonna hesitate. Hesitation is going to kill you on momentum plays because you're going to watch it go past your key level, and then you hesitated, so you didn't enter. And then what you're going to do is you're going to trade aggressively, and you may end up buying that top right before the sell off. Treat trading as a video game. I say this all the time, and I know it sounds crazy. Treat it as a video game. You can't be scared to fail because you're not going to succeed. In a video game, if you're playing something and you fail at it, what do? You restart and you try again. And you learned your lesson the first time on that loss. So you're coming at it from a different perspective the next time. We only learn from our losses. So I treat trading like a video game. I don't care if I lose. And that takes emotion away from me. If you trade with emotions, you're going to hesitate, like you said, self sabotage. Um, you have to take those factors out. Don't trade with money that you aren't willing to lose, and be confident in your technical analysis, and take those first entries, follow that gut feeling. And that's what I did. I failed so many times, and then when I just came at it with the I don't give a fuck attitude, that's when I succeeded, because I no longer cared if I lost that money. I believed in myself, and I thought I was going to be right, so I just went with it. And you just have to be confident in yourself.